it's the weekly expiry, and I think that's having a toll on the markets as well. Just look at the recovery. I think Bank Nifty has recovered more, or much more than what was the it was trading earlier. We just see the last 5 minutes move. That's what I'm talking about. Dipan Mehta is now with us. Dipan, where do you look at the Indian markets? Now other markets have also started to go up. How would you look at India reacting to US going up every day now?
Yeah, good afternoon, and thank you for having me on your show. So I think 2023 is going to be a great year for Indian stock markets. Can't say the same about all the other markets, which will be grappling with recession and higher interest rates. But in India, I think we are seeing many large sectors of the economy do very well, right from real estate, automobiles, capital goods, and some of the other larger sectors as well, especially those related to consumption. With the exception of externally focused sectors, I think we are seeing very positive trends across board, and that start to reflect in the economic trends and the stock markets as well. And while I think the last few trading sessions may have been a bit challenging, but this year looks set to be good and hope to build on the foundation created in the last financial year, rather the last year, when we had massive outperformance in terms of our markets being stable as compared to sharp declines in some of the other global markets. So very positive on Indian stocks. And I know valuations are on the higher side, but growth prospects and profit numbers may surprise us.
That's good to hear, Dipan. So, hi, afternoon. Where is it that you think those positive surprises are going to come in from?
See, I think that apart from commodities, by and large, a lot of sectors are having very good time, and some of the sectors are having the best ever time. To name a few, I think the kind of trends we are seeing in the banking sector on the income front, the total volume of business, and the quality of the balance sheet. I think I've never seen this excellent quality and these kind of such positive trends in decades. Same is true for the automobiles also, especially the passenger vehicles and the commercial vehicles. I think after many years of stagnation and declines, we are seeing very robust volumes come through over there. Then look at real estate, which is a catalyst for many of the other feeder and other subsidiary related sectors. That also, after a multi-year decline of stagnation, lower prices is coming back into life. We are seeing good volumes across the board in India, stable to higher prices, and a lot of real estate players are also expanding their land bank and looking very positively at the future. After many years of decline, the capex cycle has turned. We are seeing more and more private sector capex being taken at this point of time. Companies are expanding their capacities, and they're looking at the future in a more positive light. And with elections coming in 2024, you can only expect government spending on infra to pick up in a significant way going forward. So these are the large industries within the economy. And if consumption, rural as well as urban, if that holds up pretty well, then you could be in a very sweet spot, and India could be in a very strong trajectory. That is what I feel for the next 2-3 years or so.
So that's the take coming in as far as where the market is headed, but just wanted to bring out the chart for Cyient again in the sense of how the margin profile has actually improved, and that's the reason why you are seeing the stock reaction as well. The company had earlier actually guided that they'll come out with a 300 to 350 basis point improvement on their margins over the course of next 6 quarters. However, out of that, 200 basis point has been achieved in this quarter itself, and that's the reason perhaps you're seeing that improvement. They had also earlier indicated that Q4 normalized EPS is going to be between 14 to 15 rupees, and that has been hit a quarter ahead of that, because in this quarter the EPS is around 14.17, so that too has happened ahead of the curve itself, and that's why the street is quite excited. And they're also said that full year normalized EBIT margins rather, on an organic basis is expected to be around 13 to 14%. Also, the other trigger for Cyient is the fact that the DLM business is expected to be hived off and listed separately. The DRHP has already been filed, and yesterday we had a note from Morgan Stanley suggesting that there could be a revalue of the business, which is currently valued around $70 to $130, and that would give you an upside of around 70 rupees on that particular counter as well. So Cyient is the stock in focus on account of that. But we were earlier chatting about Navin Fluorine as well in the stock, the way it's been trending higher. My colleague, Lisa has been going through the report which is coming in from a lot of brokerages this morning, talking about how the exports have really ramped up. Let's go across to Lisa to understand exactly what's happening for that particular counter. Lisa, tell us more.
Navin Fluorine is buzzing in trade, and like how? This is on the back of updates coming in from few brokerages. Well, IFL has updated on the December export sales, and the exports have scaled up substantially. The total exports for the month that grew 87% on month-on-month basis, and it was around 2 times on year-on-year basis. Talking about realization, the R22 realization that has remained steady for the month, and HPP exports pertaining to Navin Fluorine Advanced Science Limited that saw a slight moderation on month-on-month basis. However, the highlight comes in from the CDMO segment, which was a significant contributor to the export sales. The CDMO revenues are well north of $14 million, which is way above the management guidance of $12 million revenue per quarter. According to B&K Security, they said that the poor growth in CDMO segment, that was a key overhang for the stock. So the CDMO revenue crossing 1 billion for the first time, that is actually a trend changer for the current quarter.
Okay, that's the take coming in on Navin Fluorine. Stock holding up almost 6% as we speak right now. European stocks, by the way, must highlight that because they have really been in a different orbit altogether. A good 0.5% uptick is what you're seeing across the board for Europe. So that's had a very, very smart start. Is it in any way rubbing off on us, barring just a meager bit of recovery? Not quite. Having said that, we've definitely risen quite a fair bit or rebounded quite a fair bit from the session lows today. So back at 17,850 now in trade as we speak. Dipan, you were just talking about where to place your bets and wanted to understand that within that, defense, railways, the entire capex theme, cap goods, etc. Where is it that you would be willing to take concentrated bets? Because most of these sectors have already had a decent move so far.
Very good question. And concentrated bet has to be taken on Larsen & Toubro. Disclosure here that we and our clients are invested, and that to that extent, our views are positively biased towards it. We've seen great returns in the past, but going forward as well, we feel that Larsen & Toubro, the best years are ahead of the company. Management has taken excellent steps in terms of improving their return ratios. They have completely cleaned up the balance sheet. They are focusing on large projects which are margin accretive. They're also focusing on trying to diversify their order book so they're not dependent on any particular segment or type of client, be it PSU, private sector, India, or Middle East for that matter. And on the whole, a lot of value being built in the subsidiary companies as well. So L&T is a stock that should be part of your core holding, the top 3, 4, 5 holdings. That's what we have in our portfolios. And we do feel that that's one sector and one stock which should do very well. There are other companies also which come to mind. Again, disclosure, we and our clients are invested. IT cementation looks very interesting. NCC also, I think, reported good order wins recently and are sitting on a very decent order book position. Another interesting company is PSP Projects, which is more into contracting, and that too, they're focused more on civil buildings. So that was something which we are tracking quite closely. But there are many, I think, within the sector. You could look at IRB Infra as well as so many other companies are there. All of them are sitting on very good order book position and have very good earning visibility. I think that operating leverages will play out pretty well for them. And the only real threat is rising cost of inputs and maybe a slowdown in capex or government spending, but that seems unlikely with elections approaching in 2024.
Absolutely. With the election approaching closer, in fact, all anticipation around the budget as well is that it's going to be an election budget, isn't it? Kunal, a concentrated bet on L&T or a basket of these names, an NCC, L&T, maybe with a maximum most allocation and an NCC along with it, what would you pick?
Yeah, I would go with both. I think NCC as well as L&T, both of them have shown signs of good strength. There has been very good breakouts for L&T, and L&T has this odd tendency of going into stronger periods of uptrend and not being too much affected by the market volatility. So I think currently is the phase where the stock is showing this kind of an behavior where it's moving up higher at a point when the indices are going through their own round of volatility. NCC, even though I would be bullish on it, but the position sizing would of course matter significantly over here. The stock has already run up from 70, 74 to 90 plus levels, and my belief is that it's always better to try and look at opportunities of marginal corrections where the stock would probably offer good opportunities to try and average out. So would be bullish on both of these names specifically.
Okay. Let's also address some macro cues, and a major one to look out for today is going to be the December CPI reading that may actually show that inflation is slowing down in the US. Now, the reading could very well help determine the size of Fed's next rate hike, which is why it's very, very important. Let me take it across to Harsh and find out what the polls are penciling in. Harsh?
Well, of course, along with the India inflation print will come the US inflation print. So let's break down the numbers there. 6.5% is where the US inflation print is expected to come through for the month of December. Of course, largely in the decline, US CPI, you can see the trajectory where it is and where it's going at the moment. It's in the decline, and essentially it's actually falling when I'm looking at it month on month. Core CPI though continues to be slightly elevated, so core CPI will continue to remain there, but because energy prices are falling, commodity prices are falling, hopefully that should aid the US CPI print number. Now that will of course have to, or rather the market will wait and watch as to where this number is at to try and extrapolate where the Fed really takes the funds rate, and that will determine where obviously markets go as well. So at the moment the focus will be on inflation, global markets building in a number of 6.5% at least at the moment.
Thanks for that, Harsh. Let's go to Dipan now. He's still with us. Dipan, Auto Expo is out and a lot of names are being launched. CY22 was somehow about new launches, moving on the upgrade side, pent-up demand. What do you think are triggers for Auto in 23?
More and more exciting models. I think if you look at the kind of new generation cars which are coming, SUVs which are coming, and the kind of waiting list period for which these cars are there, and the kind of aspirational satisfaction these cars are giving, I think the auto industry is in a very nice space. And I think that it's these cars and these new models which is going to drive these auto stocks up as well because of higher and higher volumes. The threat of semiconductors, rising input costs, I think now those are all well behind the auto companies. They are looking at expanding capacity. A lot of the auto companies, OEMs like M&M, Tata Motors have got a solid EV strategy also in place, and I'm particularly pleased that Maruti also unveiled new models in the EV space. And that was one thing which was lacking as far as Maruti was concerned, but it now seems that they may be a little late, but they are right on course over there. And this kind of, I think, trend I've seen after a very long time. The auto industry had many problems in the past, but now I think all of those are behind it. And this year is going to be the best ever year for passenger vehicles. And I think that next year also they should be able to easily get double-digit volume growth. And mind you, the realization per vehicle is keeping on increasing because of the premiumization strategy underway. And hopefully, if interest rates have peaked out, then one major threat for the auto industry would have been resolved. So we are very positive on auto, and that holds true for auto ancillary as well. But in ancillary business, let's look for companies which are more on the electronic auto parts, basically making auto parts which are not going into the engine, because that's something which could be a bit of a threat going forward.
Interesting. Kunal, where else in the market right now are you scouting for not such shorter term ideas, but maybe some medium and longer term bets?
So I think it's a good time to now start to go a lot more contra over here, because there are a lot many stocks which are now getting into their oversold territory. So I think something like ABFRL trend, for example, looks extremely strong over here. The risk reward to enter these stocks at current levels vis-a-vis what it was maybe 3-4 months back, when the stocks were almost 20-25% higher from current levels. So the current risk reward is also extremely lucrative as well as high. Bata India is something which I would look to be bullish on. More from the mid cap, spaces, something like GIC Housing also looks extremely attractive. My sense is that these stocks would probably get into a breakout mode pretty soon. AB Capital is something which I'm extremely bullish on, and I have flagged this off as my longer term bet as well sometime back. So I think that's also one of the stock which I would be bullish on. And going into 2023 as well as for the next set of move on the financials, I think there could be a possibility that the stock may even cross levels of 180 to 200 as well.
Okay, that's the take coming in on some of these names. Yes, most admired category, but I guess that's what's not working in their favor. And I guess that Dipan is turning out to be a bit of a problem for Bajaj Finance as well, right? While it was in the categories of an HDFC bank, but looking at the recent quarterly updates, one questions the over ownership and whether the valuations justify the kind of growth that they're going to post continuously.
See, I've been a Bajaj Finance shareholder for a very long time, and it's been a great, great wealth creator for us and our clients. And I'm not that disappointed with a 27% type of a AUM growth. Given the context, given the competition levels, and some of the way the NBFCs function, I think it's a great number, and that on a large base. Maybe Street had overvalued the stock on various parameters, but now I think gradually, if the company delivers these kind of 25-30% type of bottom line growth rates, you could have sideways movement for 1 year or so, maybe 1.5 years or so. But thereafter, I think the PE, price to book, price to earnings multiple, will correct and normalize. It has happened in the past with all the large financials, HDFC Bank included. And then you could expect Bajaj Finance to continue to deliver returns in line with the growth in the earnings per share, which even after 3 years from now, 4 years from now, 5 years from now, will be in the high teens or so, given their structure, given the aggression that the management is pursuing the business, given its competitive edges. So I'm pretty confident on the long-term prospects of Bajaj Finance. I'm sure it can correct another 5-10% easily. Selling can get overdone. You're right, it's a bit overowned stock as well. And people have too high expectations, which are somehow difficult to meet. It's not like a technology business or some platform business where suddenly it can, go up by 50% or so. There are physical challenges as well. So you need to keep that in mind. But on the whole, I'm not selling Bajaj Finance at these levels. And as I said, I'm in it for the long haul. And even next 4 or 5 years, prospect of Bajaj Finance looks exceptionally good.